Hey everybody, welcome to the Master Passive Income Show. My name is Dustin Heiner, and I'm here to help you learn how to quit that JOB, that just over broke job, with investing in real estate rental properties so you never ever have to work a job again. Now, today I definitely want to talk to you all about the real estate market, what I'm doing, how I'm investing, and give you some advanced strategies of what I'm doing with my real estate investing. Now, real estate investing definitely takes a lot of knowledge, a lot of experience, and a lot of education. Now, as I was investing, I started back in 2006. Now, if you remember 2006, we were climbing up on the real estate market. I mean, prices were so ridiculously high, and you couldn't buy a house for less than like $200,000 or $300,000. I was living in California, and at the time I could not invest in California. So I started investing in Ohio because prices were much, much lower. And from there, I was able to actually quit my job because I had 19 properties. Then I brought 20, 21. I just kept growing my business over and over again, buying more properties. And with that came more income, replacing the income that I have from my job, my JOB, that just over broke job. Now, as I started investing more and more, I realized there was so much to learn. Now, I do want to give you my free real estate investing course. It is my free real estate investing course that'll be a downloadable PDF, getting you started, show you how to find deals, how to get funding, how to quit your job, how to make sure you prepare and scale the business. Go to masterpassiveincome.com/free course. And if you look in the description, it'll also be in there, masterpassiveincome.com free course. Go ahead and get that. But then also, you can easily text the word rental to 33777. Rental to 33777. Now, today, I do want to talk to you about what's going on in the real estate market and what I'm seeing as an investor. Now, with you looking at the real estate market, you may be tempted to talk to maybe a realtor or maybe like your friend or your neighbor that lives, across the street or something like that, and ask them what's going on in the real estate market. Well, this is after COVID-19. As I'm actually recording this, it's after COVID-19, not necessarily after, it's basically the lockdowns are still going in a couple different states, but the economy is starting to come back. People are starting to spend more money. They just pumped $2.3 trillion into the economy or into people's pockets so they can spend. And so I'm seeing it seems like a big recovery. Obviously, it was a necessary dip, or they say it's necessary dip in the economy, crashing everything down, stopping everything, and now it's ramping back up. So I personally, when I talk to realtors, this is a tip that I want to give you. Realtors are always going to be really urgent. Like, no, right now is the best time to buy. Right now, you got to buy right now. That's what realtors are. They're salesmen. I mean, nothing wrong about realtors at all. You just got to understand their mentality. They're not investors like us. You see, we are investors. We look at the market for a long-term growth. We don't necessarily look for appreciation because we're real estate investors. We invest in rental properties. We buy one rental property that makes us $250 or more in passive income every single month. Now, there will be appreciation. And like I said, back in 2006, when prices were going up, 2008, 2009, then it crashed. But the prices back in 2008, prices are right now back above and beyond where it was when it crashed in 2008. Now, I'm not a prophet, or I don't know anything. I'm not going to foresee the future. But two things that I know. Number one, we've been going up in a bull market on the real estate market for a very long time, like 12 years now. And it was back in 2009, 2010, 2008, 2009-ish, when the economy crashed, when we had the big collapse of the real estate market and the prices were high. Then it crashed. Now, 10, 12 years later, we have not had a recession. We have not had a correction. Prices are back above where it was when it crashed. In my opinion, the properties should not, in 10 years or 12 years, go back above. Like basically like this, and then crash because it was so high. Now it's right back up here, and then some. So I personally believe, this is the first thing that I know, I personally believe there's going to be a correction sometime, not in the near future. In fact, I think, and this is the second part that I know, that it's going to keep going up for a little bit longer. But right now, what I'm looking at in the real estate market, it's going to keep going up. And right now, after 12 years of having no correction, no crash, no recession, most times in the normal economy, the way cycles work is every 7 to 8 years, there is a correction or a somewhat of like a little recession, but it's a correction where it goes up, then it corrects a little bit. Then it goes up, then it corrects a little bit. But now it's been almost 12 years of constantly go up. So the first thing I know is that it's eventually going to correct. Eventually, prices are going to come down. And I remember when I was investing back in 2009, I had so many people telling me, or it's like 2006, 2007, 2008, so many people were telling me, you need to buy now because if you don't, you'll never be able to afford it. You need to buy right now. Well, I did. I started buying properties, but I did do it the right way. And this is what we teach at Master Passive Income is how to buy real estate rental properties that make us $250 or more in passive income. So, give you a quick example. The price of my house was here. I bought it, was making $250 or more in passive income. The crash happened, went down, and now it's right back up. But all throughout those 10, 12 years, I've made money every single month because of the passive income that it brings in. I don't worry about appreciation. Appreciation is great when it comes, but sometimes it doesn't. And so on paper, I was basically underwater, or I had negative equity. Over time, it goes back up, which is the great thing about real estate. It will eventually go back up. So the first thing I know is that when we see a correction, we're going to be buying. But right now, I definitely see that we're not going to have a correction anytime soon. There's many different reasons why I don't see a correction anytime soon. Realtors will be saying, hey, prices are going to keep going up forever. You need to buy now. They're going to say that. People who are little bearish or a little more pessimistic, they're saying right now's the crash, right now's the crash, right now's the crash. I'm a little, I wouldn't say in the middle, but I'm just looking at the big picture. This is the second thing that I know is that interest rates are crazy low, which is going to get into what I want to talk about, my advanced strategy. If you remember last week, I talked about letting you know my strategy for getting more properties, buying a bigger house, and all that sort of stuff. It's a pretty big scheme. It's an advanced strategy, which I'm going to fill you in on. Interest rates are so crazy low right now. Inventory is steady when it comes to amount of properties on the market. There still are plenty of properties on the market. More properties are coming on. So number one, interest rates are low. Number two, inventory is going to start ramping up, which means there's going to be more inventory and more things that you can buy. Prices may come down a little bit, but I don't see it stopping because people still have money in their pockets from COVID-19. They're after 2 months of being locked in their houses, they're like, yay, I get to go out and spend money. Well, that's going to make the economy go up. Plus, it's an election year. In an election year, usually the president, whoever it is, doesn't want to see any trouble because they want to get reelected. And so we're going to see something like that. We also see the Federal Reserve lowering rates. It's about like it's at zero or below. I called back in, I want to say it was like April or late March when the Fed did lower that. It went down to almost zero. People were saying, well, it's not going to affect the mortgage market. I'm like, well, it eventually trickles down into the mortgage market, and we're seeing historic lows. I could literally get a mortgage for like 2.9%, a 30-year loan at a 10% down. Now, it's a personal residence, which is what I'm going to get into my advanced strategy that I do want to share with you. But what I'm actually seeing is prices are still going to keep going up. In fact, I also believe the real estate market is inflated by about $100,000 in my area. Now, other areas are going to be totally different, but let's say one house is worth $100,000 more than it should be. Same thing, a house over here, like house A is worth $100,000 more. Property 2 or house 2 is also worth $100,000 more. Now, in the market, what I'm seeing, realtors are saying buy now, buy now. People who see, hey, the economy just stopped, it's going to be a correction, don't buy, don't buy. My opinion, two things. Number one, if you're going to buy a $300,000 or $400,000 house, know that in the next 2 or 3 years, there's going to be a correction and the prices, the value of that's going to go down. But it'll eventually go back up. The second thing that I want to share with you is that as an investor, now your personal residence, totally different story. If you're an investor, you're buying for passive income and cash flow, you do not want to buy those properties that are $300,000 and $400,000 and $500,000. The reason why is you're not going to get passive income. The amount of rent that you can get from the property is not actually going to work out. So what's going to happen is you're going to have a $400,000 mortgage and you're going to be making $100, $200, or $300 a month in passive income if you can do that, if the rents are high enough. But then if something happens where the tenant moves out and you don't have a tenant in there for 1 month, that's an entire mortgage payment you got to make. That's probably going to eat up your entire passive income for the entire year. We don't want to do that. What we do as investors, we buy lower priced homes that are maybe, let's say, $40,000 up to maybe $120,000 that give us good passive income. Remember, a minimum of $250 or more in passive income. Now, the key to my real estate investing strategy, actually, ever since the very beginning, but especially right now, I always buy income producing assets. I don't buy assets or not assets, but basically liabilities. If you play the game Cash Flow, from Robert Kiyosaki, really, really fun game. I play Cash Flow for Kids with my kids. They love it. They're learning income, expenses, debt. They're learning passive income, earned income, all that sort of stuff. They're learning about all that great stuff. And at the same time, they're realizing, you know what? If I buy assets, I can actually make money. And so what we do is we buy income producing assets, assets that make us money, puts money into our pocket. That's what an income producing asset is. So now what I look at here right now, and this is my advanced strategy. So this is where I'm going to be sharing with you how I'm actually going to buy a new house, a bigger house, more expensive house, and buy maybe 4 rental properties and have it pay for itself and only put 10% down on everything. So I'll tell you this, a whole entire strategy. I'm super excited about it. And it's only working because interest rates are so low. Right now, they're literally 3%. Can you believe that? 3%. That's nuts. A 3% mortgage or a 2.9% mortgage, that is so crazy because inflation is usually 3%. If you get a mortgage at 2.9%, inflation is going to actually be more than your mortgage. And so over time, you're really not paying any interest. It's just going to inflation. Anyways, long story short, what I want to share with you is how where I'm currently living, I'm going to sell my house. I'm going to buy another house, and I'm going to buy rental properties on top of that. And with those rental properties, I'm going to make money, put some money in my pocket, pays for my mortgage, and I have an extra maybe $2,000 in my pocket. So let me give you the entire strategy. So right now, I'm currently living in a 1,250 square foot house. I'm literally in my bedroom recording. So if you're watching this on YouTube, you go to masterpassiveincome.com/YouTube. You can see me recording. I'm in my master bedroom because we're living in a tiny house. What it was, we moved from California, had a huge house, 2,400 square foot, like 5 bedrooms. It was beautiful, loved. We could have stayed there forever. I had a 2.5% interest rate of 15 years. Don't get me started. I had to sell it. Long story short, not had to. I wanted to sell it because I wanted to move to Arizona. I couldn't rent it out for more than my mortgage. Long story short, we only rent for $250, or we buy properties that make us $250 or more in passive income. Since I own the property, I knew that if I rented it, I would not make money. In fact, I'd lose money, which is not a good investment. So I told myself, do not, you basically can sell it, pocket $150,000, or rent it and not make any money, if not lose money. So anytime, here's a pro tip, what I also tell my students. Usually I'll get a student who says to me, hey, Dustin, I have a property. I currently own it. I could rent it for this. If I sell it for this, I can make $150,000 or I can make $100,000. But if I rent it, I can make $100 a month. And this is what I tell them. After they know the entire business model of renting, getting passive income, and making $250 or more in passive income, I ask them this question. If all things considered, you bought it right now at that price, and you knew that you would only make $100 a month, would it be a good investment? And usually they'll say, no, it wouldn't be a good investment. And the second thing they'd say is, then I guess I have my answer. I'm like, yes, you have your answer, because if it's not a good investment to buy now, because you're not going to be making the right money, it's not the right property, then sell it. Take that cash if you can. Now, if you're underwater and the only thing you can do is rent it, then that's a different story. We can go down that route. So now for me, what I have is I have my rental property. I had my house. I wanted to move out of California, move to Arizona to be closer to my in-laws. And in doing that, we sold our house because I couldn't rent it for the amount of money that I needed to make $250 or more. And then I had a rental here. I moved into our rental. The tenants were moving out. I just quit my job and I thought, you know what a great time to move to Arizona. I'm not locked down to a job. So we literally packed everything up, moved into our rental. Now, here's where I get to the strategy of now selling this house. Now, remember, I've always said this. If I am blessed to live in this house for the rest of my life and never work a job again because I own this house outright, I am so happy. I would absolutely do that. And with my 4 kids, with my amazing wife, I would absolutely do that. I would live in this house the rest of my life. I'm very frugal. I don't mind a smaller house. It's just the way it is. My grandparents, 7 kids, they grew up in a 970 square foot house with 7 kids. So if they could do it, we can do it. But here's what I'm looking at now. we have the value of my home is probably about $100,000 more than I believe it should be. At the same time, homes that are bigger, they're going to cost more, obviously, even though I realize those homes are $100,000 more than they should be, in my opinion. Like, let's say they're selling for $390,000. I'm looking at that property. I'm thinking that should really only be $290,000. But my house is also worth $100,000 more. So this is what I could do. Since I own it outright, I could literally sell this house and trade up to a bigger property. When I trade up to a bigger property, I'm actually going to be paying a little more, obviously, because it's a bigger house, but I'm cashing out that equity of $100,000 and I'm putting it into that next property. And the only reason why I'm able to do this, or why I'm willing to do this, is because of the mortgage payment on a property that is selling for $390,000 at 3% for a 30-year loan. The payments are only like $1,400. That is so crazy. Obviously, you put a down payment down and it buys down a little bit. $1,400, maybe $1,500 a month. I mean, I could work at McDonald's and pay that if I really needed to. And so I'm looking at buying a bigger house, cashing in my equity here, just rolling it over into another bigger property, and taking all that equity. Now, here's a big thing. This is how I'm actually going to buy rental properties on top of buying a new house. So I'm going to buy properties that are going to make me money and pay for my mortgage and make me money in passive income. So here's what it's going to be. I'm going to buy a $400,000 house. I'm going to sell my house for like $375,000, $395,000, hopefully at the very top. So it'll be about $100,000 difference, which is fine. I'm going to pocket all my cash, but I'm not going to put that money when I sell my house, all that cash that I get, I'm not going to put it into the new house. That'd be a waste of money for me. I'm an investor. We're investors. So what we do, instead of doing that, we put that into rental properties that buy us this new property that we're going to buy. So here's what I'm going to do. I've already talked to my lender. He is going to give me a 10% down. 20% is actually a worse interest rate. He's going to help me get a $400,000 or below note or a mortgage on a $400,000 house. I'm only going to have to put 10% down. 10% down is $40,000, which I have in cash. And even when I sell my house, I got $240,000 or $250,000. I can literally put all that down, but I'm not going to. So I'm only going to put 10% down. It's a 3% loan, 3% loan over 30 years fixed. And then what I'm looking at, I'm putting $40,000 down. Of my selling my house, let's just say it's rounded out to $200,000. Hopefully these numbers aren't getting confused in your head. But if I sell my house for $250,000, I take $40,000 of that and put it into as a down payment on my new property, my bigger home. It's going to be like twice the size of the yard, 2 extra bedrooms, hopefully another 1,000, maybe 1,500 square feet. Hopefully it's going to have the big kitchen for my, it's someplace that we really want. Right now we're just living in a rental. I'm going to take $40,000 of that $250,000, put it as a down payment, and then I have a mortgage of $1,500 a month. But I have an extra $210,000 that is in my pocket. Why would some people might say, why don't you just put that down in your house, get the mortgage lower? I'm like, well, aha. If you've ever seen Eddie Murphy's movie, it's a fantastic movie, Coming to America. There was an outtake where one of the guys, Eddie Murphy's dressed up as a guy, and he goes, aha, aha. Well, here's us as investors. Aha. We actually have $210,000 now after we sell our house in cash that I could buy properties with. Now, the business model that we have at Master Passive Income, we buy lower priced homes. What I could do, I could literally take that $210,000, buy two $100,000 houses that rent for maybe about $1,200, $1,300, or $1,400, and then pocket $2,000 a month in passive income. But I'm not going to do that. What I'm going to do is I'm probably going to buy $40,000 to $50,000 homes. So I'm going to buy probably 4 $50,000 homes cash. I'm not going to get a loan. I'm going to buy them all cash. I could buy them, put in more down payments to get more mortgages. I absolutely could do that, spread out my money even more. But I love not having mortgages because I don't need to. When I was building my business, I had so many mortgages. I had lots of mortgages. I was blessed to be able to pay those off. But what I'm going to do is I'm going to buy 4 rental properties at $50,000 each. Each one of those are going to rent for $800, maybe $850 a month after property management, taxes, insurance. Remember, the tenants are paying for those. After all of those fees and expenses, I'm probably going to be pocketing about $500 a month from those 4 properties. Now, I'm going to be making out of the 4 properties at $500 a month. That's $2,000 a month in passive income. Now, I know one thing you might be thinking, well, hey, Dustin, if you're only putting 10% down on this new property, wouldn't there be a PMI or principal mortgage insurance? Because if you put down less than 20% down on a house in a mortgage, you're automatically charged a PMI. Well, I looked into that. Obviously, that's something that's in my brain. I'm an investor. So my mortgage broker said it's $81 a month for a PMI. So if I'm paying $1,500 in a mortgage, and then I have an $81 PMI, let's just round it up to $1,600. With those 4 properties, I am literally going to pocket $400 on top of it. Remember, those properties are going to make me $2,000 a month. My expenses are $1,600 a month. I'm going to have 4 properties, actually a 5th one because I'm buying that new one, and I'm pocketing $400 a month in passive income. Now, the only reason why I would do this is because obviously interest rates are low, but I know where and how to buy properties that are anywhere from $30,000, $40,000, $50,000 that can make me $400 or $500 a month in passive income. And I know you might be thinking, like, if you're living in the Bay Area or the coasts, or someplace where it's really expensive, houses like $500,000, $600,000, that would be really rough to be able to do that. But we at Master Passive Income, we know how to buy properties that are lower in price, but have a great amount of rent coming in. So we're going to be making a lot more money. There are so many places in the Midwest, down in the Southeast. I even have videos that show you the best places to invest. And remember, I have my real estate investing course, the free course that has gotten so many people started investing in real estate. Go in the description, literally click on the description. I'll have it in there, masterpassiveincome.com/free course. Or if you're driving right now, literally don't text while you're driving, but if you're on the go, text the word rental, RENTAL, to 33777. Now, this is an advanced strategy. Everything I just talked to you about is an advanced strategy, cashing out of a house, buying a new house, buying 4, maybe I might even buy 5 properties depending on how well I buy these properties, but my goal is to get at least $2,000 in passive income. Now, with $200,000, it is super easy to get $2,000 in passive income. My goal, and I'll be documenting through this entire process. If there's any hiccups, I'll probably let you know what's going on. But throughout this entire process, I'm going to try to get as much of the passive income. I'm going to try to get properties where I'm making $2,500 a month in total for all that, for $200,000. I'm going to try to do that. I'm going to try to get even maybe $3,000. I'm going to show you how I actually do that. So hopefully you'll be able to come on along for a ride and see that, you know what, hey, Dustin's able to do this. He has this advanced strategy. And the thing about real estate investing is most of us don't know what options are out there. Once we're exposed to the options, just like the options I just showed you, having a $1,600 mortgage, getting a minimum of $2,000 in passive income from the money from the sale of my house, that's an advanced strategy. Most people wouldn't even think about that. But here's the great thing. In 30 years, I'm going to still own that brand new house, but the mortgage is gone. I'm going to buy, or I'm going to own these other properties, 4 or 5 other properties. I'm going to own 5 properties total, maybe 6 with no mortgage, because over time, the mortgages are paid for by the tenant. Although it's going to be so amazing. So what's great is year after year, that mortgage gets chipped away by the tenants in my other properties. So that is how I'm doing investing. And this is how I want to see you get started investing. Stick with me with Master Passive Income. You guys are fantastic. Get out there and start investing. Right now is the best time. And I want you to get this quote in your brain. When is the best time to invest in real estate? Well, it was 20 years ago. But the second best time is today. Get started today. And I know what you might be saying. Hey, Dustin, I thought you just said there's going to be a correction. There's going to be a correction where the market's going to come down. I could probably buy them cheaper. Like, yes, that's very true. But we don't know when it's going to be. And if we buy for passive income, lower priced homes, we are still going to make money every single month. The properties that I bought in 2006, 2007, 2008, before the crash, I still own them, and I made $250 or more in passive income every single month since then. Through the depression or recession or whatever it might be, all the way to now, I've made passive income every single month. So you stick with me. I'll show you how to get passive income. And I would super appreciate it if you shared with one person this great information on how to invest in real estate. I would really appreciate it. And don't forget to subscribe. And if you're on YouTube, like this video, like this podcast. You guys are fantastic. Thank you so much for being here. All right, again, Dustin Heiner with Master Passive Income. I'll see you next time.